Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we had another crazy week in the markets where the volatility had increased. It pulled back a little bit, and then towards the end of the week, as we closed today on Friday, the volatility started to spike up once again. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I left my lines on the chart from last week like I do each and every week, so you can see how the forecasts have panned out. And as I zoom in here, you'll see that, again, these lines are what I drew last Friday, with Friday being right here, that little candle known as a spinning top. And I said that at the beginning of the week we would most likely bounce off of this 20-period moving average, which we did very nicely. In fact, Monday we didn't just bounce up, we gapped up. And on Monday we actually hit my target price, which is the end of this diagonal line. Continued a little bit higher on Tuesday and Wednesday. And then we had this big red candle right here on Thursday. And of course Friday right here on the 18th we closed right on the role reversal support line that again I drew from last week. I said that this would act as a support because former resistance right here and here, once broken, turns to support. Now what does that mean for next week? Well, let me erase these lines right here. And what I'm going to do is redraw everything all over again so you can get a clear picture of how we do this. I think this role reversal line will actually hold. Again, I'll do it for you so you can do this on your own charts when you get to them. The former resistance here and here was broken right there on the 26th of July. And we have a video on our website that'll direct you to. It's called the role reversal. It's really important that you learn how to use the horizontal lines as support so you can gauge your target prices and also manage risk. Now, as you can see, Wednesday, Thursday, Friday, we gapped down and the volume down here has increased. So what I think we're going to see is most likely on Monday, we're probably going to see a drop in volume down here. We'll see a little bit of a drop. And with that drop, that tells us that the sellers are becoming less motivated. Gaps here and here fill, which means that the price will most likely move up to go to those gap points as a magnet, price magnet. So I think that early on in the week we're going to start moving back up right here to test this 20-period moving average. And then once this gap fills, this will be a gap resistance. That's my secondary target. I think once that gap fills, we could very well start to see the prices come back down to test that support once again. So that's my forecast for next week in the diamonds. By the way, our percentage of accuracy is the best in the world. Hopefully you're following along with this, you're learning, and your percentages will also increase as you use technical analysis as a tool to not just forecast, like I said, but to manage risk. Okay, let's look at the spiders, ticker symbol SPY. That's the S&P 500 ETF. And as I zoom in here, again, I'll show you that right here was Friday's close from last week's report on the 11th. And I said that we would move up early in the week with the end of this line, hard to see because it's red over red, but the end of the line right there was my target price. So on Monday, we hit that target price, just like the diamonds, went up to test this resistance, which is the horizontal line that I drew. We barely moved over that resistance and then came right back down as we pulled back from that resistance being the 20-period moving average. And again, if you have a chance to look at last week's video, this is exactly what I said. I said the stock will most likely move up to the moving average and then pull back, and that's exactly what happened. So what I'm going to do here is erase the forecast line from last week. I'm going to leave that resistance line in place because I do think that the S&P will start to move up to retest that as resistance. In fact, as the price stays down, this 20-period moving average is going to start to drop down, which is why I put my target at the end of that line right there at 245.57. So keep an eye on that. Track it with us, and you can see next week we'll go back and review this and see whether or not the forecast worked out. And my guess is that it will work out, because technical analysis is really the greatest tool that you can use right now for forecasting the markets. Okay, now the Qs. It's a Nasdaq market, QQQ, also known as the power share. Same thing. It was pretty much the same scenario where I drew my resistance up here, and I said that we would go up with my target to that 20-period moving average. And lo and behold, what happened? We see that the market moved up exactly like I said it would, went to that blue line, that 20-period moving average. The blue line held as resistance, which is that horizontal line, and then we pulled back. So I'm going to erase all these lines once again. The Qs representing that tech sector could be a little bit more, I guess you could say, touchy, because the tech sector is very sensitive right now to what's happening in the world of politics in Washington with Apple, and a lot of Amazon stocks has a lot to do with commerce, e-commerce and such. I do think because of the spinning top that we're going to see the Nasdaq market move up. But I think that this 20-period moving average is going to continue lower. So that 20-period moving average is going to act as resistance, and I'm going to be so bold as to even draw a pullback point from that by the end of the week. So I think short-term rally in the beginning of the week with a pullback off of that resistance. So that's the Qs. Now the Russell 2000 obviously carries more weight because it monitors 2,000 stocks. We went up, but we didn't get to the target price like I thought it would. So this is the only index out of all the indices that we analyzed that did not fully complete the target, but it went up at least 70% of the target. So can't quite call that a win, but all of the rest of the forecasts that I'm showing you here are 100% accurate. Just want to put that out there for the record. And as I erase these lines and back up just a little bit, I'm going to show you something very interesting that's happening with the Russell 2000. This is the support level from back in May that was tested again in the end of May. So that is going to be a support level that I think is going to hold. So now that we've established support right there, let me zoom back in and tell you the rest of the story. This is a dramatic sell-off in the Russell 2000, but this small-bodied candle, also known as a spinning top, is usually found at pivot points, and being that the shadow, that long vertical line under the candle, is quite long, that tells us that the buyers fought back on this Friday, the 18th. So I think that support level is going to hold, and I think the market is going to rally. There's a couple of reasons other than the support level that lead me to believe we're going to rally. The other one is the wide divergence from this moving average. It's called the price divergence from the moving average, and we call that the rubber band effect. When the price stretches far away from that moving average, it tends to get drawn back to the moving average. So I'm going to put my target right there for the Russell 2000 at 1391.85. And we're going to see what happens right there. Now finally, the VIX. Last week I ran out of time, but I did leave my forecast lines up from the previous week. I said last week it would rally, which it did, and I put my target price all the way up here, right around 1630. And you can see Friday, again, we closed within pennies of that target price. And I'm going to leave that up there, but I'm going to erase all of the other lines for the VIX, because I do think that the VIX is going to pull back just a little bit next week at the beginning of the week. I think we're going to see a little bit of a pullback like that. But I do think the VIX is going to start to rally back up and eventually break over that resistance. I think as the volatility heats up with the political tensions, investors get nervous, and it's important that you understand that the VIX is inversely related to the S&P. So again, if the VIX is going to pull back early in the week, that means the S&P will most likely rally. Then again, if the VIX starts to rally, that means later in the week the S&P could very well sell off and go to the lower levels. So the VIX is the leading indicator. Keep that on your watch list. It's a very important tool, and it's important that you track it for risk management purposes as well. And that's our report. This coming Monday, the 21st, we're having an open house Q&A session. You can find the link for that open house at the bottom of our front page right there. Go to themarketguys.com, click on that. It'll bring you to the registration page right there. All you have to do is put in your name, email address, and light information. We don't use this to bother you with sales emails or anything like that. We send you the invitation, and then you can get a reminder as well. So in other words, if you get the invitation through your email and you registered and you're not able to make the session on Monday, we'll still have that recorded for you. So that's another added value service that we provide here at The Market Guys. So I'm really looking forward to speaking with you on Monday. It's at 8 p.m. Remember, bring your stock symbols with you. We analyze the charts. We analyze your stock symbols. We'll answer your questions. And we have an action-packed hour from 8 to 9 p.m. Eastern Time on Monday. Have a great weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.